everyone, and welcome. Thank you for joining us for this Money Show Accredited Investor virtual event. I am pleased to introduce you our speaker for this session, Martin Zines, the managing partner of Bequest Funds, who has 12 years of real estate and note fund investing, as well as 16 years of entrepreneurship experience. Mr. Zines has personally helped over 1,000 borrowers stay in their homes with affordable payments. And to our viewers, please type any questions you may have in the live chat box. Time permitting, at the end of the presentation, I will announce your questions so that Martin can answer them. With that being said, Martin, thank you again for speaking today. The floor is all yours.
Wonderful, wonderful. Well, thank you to the Money Show and for putting on such a wonderful event. Definitely privileged and honored to kind of be a part of it. And so I'll get things kicked off. Welcome everyone to Bequest Funds. And we are an income fund that provides consistent passive income to our investors on a monthly basis with real estate notes. And what's interesting is kind of taking a step back. Myself and my partner, Sean, we're like many of you. We're out, we are investors, we are business owners, and we have been, on a lifelong journey to learn about and build passive income in our lives, and have something of a legacy play to be able to hand down to our family after we're no longer here. And I didn't find passive income in my life with a government contracting company my wife and I launched in 2005, or any of the real estate properties that we've been purchasing since 2009. But what I did find with building passive income was through mortgage note investing. And in 2013, I launched a hedge fund buying mortgage notes across the United States. And what I found is I could help homeowners, I could help investors build passive income in our lives. And this just seemed like a win-win. And, we've been doing this ever since. And so as far as Bequest Funds is concerned, we launched it a few years ago. So we could bring in more of the investor community into this monthly passive income scenario. And it's been a great ride since that point. And so if you're looking for more passive monthly income, we definitely have some options that we want to cover with you throughout the presentation. So as we know, Peter Schiff didn't have to tell us, but as we know, inflation is here. And what we believe at Bequest is the best hedge against inflation is to add more monthly passive income into your world. So if you have money parked, you're going to get burned at some point with where inflation is headed. If you're heavy into the stock market, I think you've kind of gotten a sense especially over the past few weeks, that it could be overheated, and there's a lot of volatility associated with the stock market. And what we believe is our income fund is the best hedge against inflation. And our motto says it best: you make one simple investment with us and you receive passive monthly income for life. So let's get things going. So I wrote a book in 2020. It was my 5th book, and it was titled Cash Flow Dojo. And what I argued in that book is that the dual income model is outdated and doesn't serve the U.S. family like it did before. A typical family in the United States needs to be working on building multiple streams of income in their lives. Some active, some of it passive. And if you kind of look at this quote from Warren Buffett, he mentions, if you don't find a way to make money while you sleep, you will work until you die. And you see this chart here to the right, where you see individuals that are earning $200,000 and less in our economy, which is about 99% of the individuals in the U.S. market. They have heavy emphasis on wages and salaries, and and also retirement income, like 401ks and other types of retirement income that focuses on appreciation. And you see the more affluent individuals, the 1 million plus, the heavier emphasis is on investment income, such as what we provide here at Bequest. And what's interesting is most folks think of investing as an appreciation play for where they can cash out at some point down the road. And you may seek to buy investments low and hopefully sell high, at the end of the day. That may be a good play. And however, what we recommend is, especially during this inflationary environment we're having, is to also be diversified and focus on building monthly passive income in your life. And and that's one of the reasons why we set Bequest up to pay out monthly. We set it up as an evergreen fund, so there's no expiration to our fund. You make one simple investment and you get paid for the rest of your life, and that's how we're set up intentionally. So how the income fund works: we purchase pools of mortgages from across the United States. These mortgages tend to be on owner-occupied residential properties. So these are hardworking families that that live in their homes and take care of their homes and make their mortgage payment on time, each and every month. So what we do is we buy these mortgages from the secondary mortgage market. We hold them in our portfolio. And as the homeowners make their monthly payments, we in turn pay our investors on a monthly basis. So that's really how the fund is set up and works. Now, every so often, or at least once or twice a month, we'll have a mortgage that pays off. So someone refinances their mortgage and we receive a payoff into the fund. So what we do at that point is we take the profits from those payoffs and we reinvest it into purchasing more performing mortgages from the marketplace, which provides further protection for you as the investor. And we'll kind of get into the nuts and bolts and shortly, a little more so. And one of the key features for our fund is you can take the monthly distribution, or you can allow it to compound, which gives you an increased preferred return as a result. So investing isn't so easy. And I think that what's interesting is I've been to enough of these money show events where sometimes you're a little bit more confused, or, at the end of the money show events, because you've heard from so many different fund operators and investment opportunities. And, it may seem a little overwhelming, and I completely get that. And, as an investor myself. So finding peace with investing is easier said than done. I think it's kind of safe to say. And, also couple that with, you have a finite amount of capital to invest. So where you place your capital is a serious question. This is why myself and our team, we hold discovery sessions with each investor prior to someone investing in Bequest, and we explore whether Bequest is the right fit for them. We're not financial advisors, and we don't provide financial advice. However, we can discuss someone's current situation and help them determine if they do need more monthly passive income in their lives, and then we can create a plan by which they can work towards building the amount of investment into Bequest that will pay them the passive income figure that they need to maintain the lifestyle they're looking to maintain at the current state, or at a point in the future. We also determine other things like, what are they currently doing to earn passive income, and how much passive income, they need to see down the road when they move into retirement. So we entertain these questions. And I just put up a few like bullet points where it just kind of highlights some of the things that go through investors' minds, as I do talk to investors on a daily basis. And so I do hear all these concerns. And so I just kind of put them down in bullet point format. So what if you could do both? As both obtain freedom as well as passive income in your life for life. I do speak, as I mentioned, I speak to investors daily, and what I find is there's a great deal of stress and anxiety with a lot of individuals as it relates to investing. A lot of folks admit, being glued to the stock market, cable news, stock symbols, phone apps, and, other forms of technology that really creates anxiety for these investors. And I find that a lot of them, I find myself to be a psychologist sometimes. A lot of people just they want to do well and have enough in retirement or have enough coming to them in terms of monthly cash flow, but they want to limit the amount of stress and anxiety they have as they do that. So we feel like, Bequest Funds accomplishes that by allowing individuals to make one simple investment in our fund and to receive monthly payments ACH'd into their account on a monthly basis, with no questions asked. And to date, since I've been a hedge fund operator in 2013, since we opened the fund a few years ago, Bequest Funds a few years ago, we have never missed an investor payment. So, that kind of track record, definitely invokes confidence with a lot of the investors that invest with us. As far as passive income for life, we're set up as an evergreen fund. So, that speaks for itself. We're not looking to term this out. We're not looking to close out investors, redeem investors, give them their money back, etc. When my partner Sean and I, when we launched this fund, it was initially going to be a friends and family fund, something that Sean and I would put money into, our families would put money into, and we would be able to pass it down to our children. And Sean and I put in over $1 million, so we have skin in the game. And this has been a vehicle that we've been using as investors ourselves. And so, but we did decide at some point to open this up to the investor community, because we know there's a lot of individuals that are starving for yield right now, and our income fund addresses that. So as far as Sean and myself, I know I had a wonderful introduction that's already been done. So I won't go into all the points. I did receive my MBA at Drexel and my master's in project management from George Washington University. I'm most proud of helping over 1,000 homeowners avoid foreclosure, as when I launched the fund, the initial hedge fund in 2013, I was buying distressed mortgage notes. So these are homeowners that haven't paid in a few years. I was able to work with them in a compassionate manner, build payment plans that they could afford to help keep them in their homes while making a profit for our company. And that's really how my footprint into the mortgage note space, and Sean's for that matter, really started. So that's really the heart of our business. It's based on compassion. It's treating people with respect, and that goes for our investors as well as our homeowners that pay our bills essentially. On top of that, my wife and I and our 4 children, we live in Sarasota, and I have written 4 books on note investing and the cash flow industry, and I speak at various conferences. As for my partner, Sean, he's been in the real estate investing industry since '08. And also he has a long career with Fortune 500 companies in the areas of finance, investing in technology. He heads our acquisitions department and runs operations for the company. And he's been responsible for acquiring over $40 million in real estate notes over the past few years. So with that said, you don't get to that point in life without having a stellar reputation in the industry as doing what you say you're going to do, and going through on trades that you commit to. And as far as Sean personally, he lives in Sarasota as well with his wife and 2 children. And that's where our company is based. And if you're ever in the Sarasota area, we'd love to have you in our office. We can see Sarasota Bay from our office, and it's just a great place to be and visit. So we encourage folks from the Money Show to come and visit us here. So I want to say, saying hello to Bequest Funds. What I would say, our team is what really drives our performance for our operation and allows us to hold our obligations to our investors. We have 14 individuals on staff that drive performance daily. We have a controller that monitors metrics for the company daily, and which means they're able to address any issues that come up, and we're able to react same day. We have an incredible asset management team that has deep-rooted relationships with homeowners, and as a result, our portfolio sits at a 97% collectability percentage, which is unheard of in our industry. So what that means is 97% of our mortgages are paying as they need to pay. And, that's a reflection of our team and being diligent about monitoring that on a daily basis. As far as our investor relations, I do run the investor relations team. As I mentioned, I talk to investors constantly, and we are all about communication, from sending out weekly emails, monthly statements to investors, giving them a portal access with 24/7 look at what their investments are doing, as well as providing quarterly letters that provide our financials for Bequest Funds, so folks know what the fund's doing at any given point. So with that said, we have 3 different classes. We have a 6% annual preferred return option with a 6-month commitment. We have an 8% annual preferred return with a 1-year commitment. And we have our most popular one, which is a 9% annual preferred return with a 4-year commitment. And with that said, every time we have a large trade coming up, which we do in a few weeks, we do run a promotion of sorts, and we are offering that to the first 5 investors from the Money Show that subscribe with our income fund, and we can elaborate on that at the end. And one thing I do want to say is that, when we offer returns of 8% or 9%, there are no fees that will reduce that preferred return to you. So I know with some mutual funds or some other investment opportunities, they may give you a preferred return number, and then fees subtract from those preferred return numbers. That is not the case for Bequest Funds, and we intentionally set it up that way. Now, the fund is a 506c Reg D income fund, so it is only available to accredited investors. And we can definitely talk to anyone who's interested and determine if someone's accredited, if you do need that help. Now, I'm going to skip over to the slide here that gives you an idea of the portfolio and where it sits today. We have our average investors in the fund for 160K. We have 11 million assets under management, and we anticipate raising about 15 million this year, with the fund capping out at 50 million. And we anticipate closing out the fund in about 2.5 years from this point. Now, the secret sauce to our fund is that we operate at a 64% investment to value ratio. So what that means is it's essentially, if you have a $200,000 mortgage, we are in that investment for no more than 130,000. So we are considered a very ultra conservative fund. And we keep what some may consider like a loan to value, percentage. We do keep that at a very low rate. And where banks operate at 80%, we're at 64%. So we believe we're more conservative than the average bank. These are some charts just to show you the amount of income that's coming into the fund versus the money that's going out to either monthly distribution to investors or the total expenses. And as you can see, the amount of income coming in from the homeowner payments is what pays our investors on a monthly basis. So it operates in a very healthy manner, which we like to term it an income fund that is low risk, but offers still a high yield. And with that said, I just want to end actually with just letting you know, there is a 60-day deployment period for anyone coming in the fund that allows us 60 days to source and acquire a new pool of mortgages to put those investment dollars at work. Because we have an opportunity we're closing on in a few weeks, we are waiving that 60-day deployment period for the first 5 investors that come in the fund. And with that said, you have a few QR codes here that you can click on and get more information about how to get set up with our fund. You have my phone number here. You have my email. Please, shoot me an email. I'm going to be meeting one-on-one with folks over the phone or in person over the next few days as a result of this conference. And I'll take any questions that anyone has at this time.
Thank you so much, Martin. And we do have quite a few questions. The first one being, are these subprime loans, and how are the dividends generated when mortgage rates are so low?
Yes, that's a great question. So how it works is these are all bank originated mortgages. And so what happens to a portion of bank originated mortgages is they go into default at a certain point in time, and the bank will bundle those into tranches and sell them into the secondary mortgage market for a deep discount, let's say 20, 30, 40 cents on the dollar. And a hedge fund is going to take those mortgages and is going to work with those homeowners and create loan modifications, giving them payment plans that those homeowners can afford. And over a period of time, now, mind you, these are good individuals. They just ran into a life circumstance like a divorce or bad health, and they're back on their feet now, and they have a loan modification in place, and they become what we call reseasoned and reperforming. And so what that hedge fund does over, a year or 2 years of this seasoning, they will sell it into our income fund at 70, 80 cents on the dollar, which equates to about an 11 to 13% yield, which allows us to comfortably pay out our 8 or 9% pref to our investors.
And for tax purposes, is this a 1099 or a K1?
This is a K1 where a portion of the income is going to be attributed to capital gains, and a portion of the income is going to be attributed to interest income, which is essentially ordinary income. So we actually don't know that breakdown until the end of till the year's closed out and our books are closed out. But it's generally about 25% attributed to capital gains, 75% attributed to interest income.
And do you have any foreign investors, and what is your minimum investment amount?
Yes, minimum investment amount is 50,000, and maximum investment amount is $1 million. We have some folks in at 700K, and we have some folks in at 50K. Everyone's welcome. Everyone's treated the same, and we're just trying to grow our investor base. As far as any foreign investors, we do have some inquiries. However, we don't have anyone invested in Bequest at this time that comes from outside the U.S.
And what is the tax effect of the monthly cash flow, and what is the tax treatment if I leave it to compound?
Sure. So with the 8% annual preferred return, it compounds at 8.28%, and the 9% compounds at 9.39%, I believe. I could be slightly off, but it's pretty close if I am slightly off on that. So a lot of individuals that use self-directed IRA money, they let it compound because they obviously don't need access to the monthly cash flow. And a lot of people that use non-qualified funds normally take the monthly distributions.
And how does this fund hedge inflation risk?
Oh, goodness. I mean, inflation is creeping up, and the cost of living is escalating at dizzying rate right now. And we're offering 9%, and it can help you hedge against inflation to provide additional monthly cash flow into your pocket to be able to maintain your lifestyle as inflation's escalating.
If you are collecting interest income, would this be portfolio income rather than passive income?
It is interest income. So each investor is an equity stakeholder into Bequest, and so you are part owner over the entire portfolio when you subscribe into the fund, and the income that you're earning is interest income, as nothing is going to subtract from your capital investment. So your initial capital investment will always be protected and preserved and maintained.
And do you receive information on the credit quality of the underlying deeds? And do you select specific census areas to import into the portfolio?
Yeah, so we buy from quality hedge funds that we have deep rooted relationships with. And we do full scale due diligence, just like any lending institution would do. We pull title reports, credit reports, skip tracing reports, bankruptcy searches. We do an all out acquisition deep dive whenever we purchase a pool of mortgages. And so we ensure that, only high quality assets are coming into Bequest.
And where do the capital gains come from with the loans?
Sure. So if we have a payoff that comes into the fund, we that is considered a capital gain. So what we do is we share that capital gain with our investors. And so if 20% of our total income is derived from payoffs within the fund, then we will assign 20% of the investor's income towards capital gains accordingly.
How will pending interest rate hike affect the investment?
So these are all pre-originated mortgages, which is really, really a beautiful thing. So, given interest rates are where they are. And so these are pre-originated mortgages, and they've all been loan modified or reinstated. So the interest rates are all fixed and locked into place. And so, it's really just about monitoring and maintaining the performance of the fixed term mortgages that are held by the fund.
And we have a question that asks, can an IRA or a 401k account invest in the fund?
Absolutely. So we're working with two investors right now that are rolling over IRAs into self-directed IRAs and coming into our fund. We have relationships with certain self-directed IRAs. If you reach out to me, send me an email, call me, I'd be more than happy to connect you with our partners that make it very easy to either set up a self-directed IRA, roll over your existing IRA, or just deploy capital in an existing self-directed IRA.
And with a 30-year mortgage at 3.5%, how can they get 9%? Are the loans really risky homeowners?
No. So this is where I kind of mentioned this earlier, but I'll reiterate. No issues. It's a very tricky kind of concept to get it all out of the gate. So we buy these mortgages in at a discount. We're not buying them in at par. So even though a mortgage may have a 5%, 6% interest rate assigned to it, we are buying it in at an 11 to 13% yield, because that hedge fund purchased it originally in a distressed state at a very deep discount. They want to sell it to a company like Bequest where they're going to be 2xing or 3xing their money. And what Bequest obtains is a quality performing seasoned asset at an 11 to 13% yield.
And we have time for one more question, which is, what about mortgage defaults? How are the losses on the underlying properties handled?
Yes, so we have not had to foreclose on a property to date. Our portfolio runs at a 97% collectability percentage. So 97% of our mortgages are paying as they need to pay. And so we keep our default rates low, given that we emphasize this compassionate, transparent, deep-rooted relationship with our homeowners. So we have an asset manager where their only job is to connect with these performing mortgages and ensure that they're paying as they need to pay. But if we do have one that stops paying, again, my roots are in the distress side. So we are fully equipped and capable to run a property through the foreclosure process if we need to.